What's going on, everybody? Welcome back to another episode here on the Lifetime Cash Flow Through Real Estate Investing podcast. As you can tell, this is not Rod Khleif speaking. This is Axel Ragnarsson speaking. And if you're a frequent listener of the podcast, you've probably noticed that I hop on this feed every once in a while to talk about finding off-market multifamily and fundamentally commercial real estate deals. And what I'm trying to do here on the podcast is help all of the commercial real estate investors out there find more deals, find better deals, and to increase their deal flow. And fundamentally, we can do that through a whole number of different things, whether it's direct to seller marketing, building better relationships with deal finders in our market, like the brokers, the PM companies, the other service providers. But I also talk about how we can make the most out of the deals that we do find and extract the most value out of the deals that we do pursue. And that's what I'm going to be talking about in this episode, primarily. 4 simple negotiating tips and tricks that you can implement in your business right when you're done listening to this podcast episode to increase the odds that you're negotiating the best deals that you pursue and negotiating the best prices. Some of these are going to seem maybe simplistic, but I would be willing to guess that most of the people who are listening to this episode maybe have a sense that this is how they should be negotiating, but they don't necessarily follow it all the time, and they kind of just rifle offers out and they make offers that are around numbers and they just try to see where they end up. And I'd be willing to bet that a lot of the folks listening don't necessarily go into every deal that they pursue with a very clearly laid out plan and objective as it relates to pursuing that particular deal. And that's really what my goal is going to be in this episode, is to give you those like 3 or 4 checkpoints that you need to follow every time you make an offer and every time you start negotiating a deal. So number 1 that I'm going to share, and again, I'm going to share 4, but number 1, your first offer when you're offering on a deal should be very specific. And when I say specific, I mean it should be a very precise and exact number, ideally an odd number. And that offer should also include sufficient reasoning as to how you arrived at that particular number itself. Now, I'm stealing a little bit of this from Chris Voss, Never Split the Difference, which is always lead with an odd number specific offer because it demonstrates to your counterparty that you've spent some time thinking about this. And this goes the same if you're on the other side. If you're selling a deal and you're countering somebody's first price, you should be leading with a very precise number. Now, what I'm not talking about here, or I should say what Chris Voss didn't necessarily talk about, is why it's so important to be including sufficient reasoning around your offer. And that, along with the fact that your offer should be specific, oftentimes go hand in hand. So let's paint an illustration. Let's paint a picture. Broker lists a property for $1 million. And let's say you want to buy it for $950. That's your price on the deal. A lot of investors are like, all right, why don't we just start with like 900, right? I'll start a little bit lower, give myself a little bit of room to work up, meet them in the middle type of thing. It's not a great plan, but it's one that most investors take. First thing that you should do is think about, how can I support an offer in the low 900s where I know I'm going to be negotiated up and I'm going to be countered most likely, right? Maybe you get lucky and they take it, but it's most likely that I'm going to be countered and they start pulling me up. But I want to demonstrate that this is a well thought out offer and I'm not just throwing a number out there to start the conversation. Well, the first thing we can do, pull other sales comps that support the offer that you're making. And let's say you're pursuing, you want to buy a great deal and you don't have a lot of sales comps that support it that are similar to the property. Well, utilize some sales comps that are somewhat similar, but maybe not exact. Maybe you look at a building that's got a bunch of 1-bed units and the building you're pursuing has got a bunch of 2-bed units and you're looking at the average per unit price or something along those lines. You're looking at a building that needed a little bit more in capex than the one you're pursuing, but you should still try to identify a couple of data points that support your case and support why you're offering at that price. It could also be, let's say you had a recent property that you already own refinanced, or you sold a recent property, and you can make a case around the data around those particular transactions that support what you're offering. Let's say for some reason there's something going on with the deal itself that is forcing you to offer this lower price. Maybe it's the rents are so low that you're going to be debt constrained with your lender and you're not going to be able to finance as much of the purchase. Therefore, you have to bring more equity. Therefore, your return is a little bit more damaged from a cash on cash return standpoint. Let's say that the property needs a lot of capex. You can try to inflate the capex numbers a little bit to help support your offer. But you shouldn't just be leading with a number with no context, because that's not helpful, right? It's not going to get somebody thinking along the same line of or the same train of thought that you're already on as the buyer. So What you should do is be highlighting these data points, highlighting why your offer is where it is, and then you should use those data points to craft an offer that's very specific. For example, $902,000, $902,700, something like that, right? Again, it's not technically an odd number, but it's much more precise, and you're arriving there with a lot of research, and it's showing the counterparty that you're invested in this transaction and that you're actually thinking about the offer that you're making and not just throwing something against the wall. So that's negotiating tactic number one. Lead with very specific offers that are supported by as much data as you can possibly find.
So we're going to take a quick break from this incredible episode for a word from our sponsor, My Incredible Freaking Warrior Program. If you look in the mirror and think about how things are going for yourself, are you thriving or just surviving? If you're just surviving, I've got this amazing mentorship program. My students are called my warriors, and at last count, they own somewhere between 190 and 200,000 units that we know of. It's an extraordinary group of people that are just flat out crushing it in multifamily. And here's why that's a big deal. We could be facing the greatest transfer of wealth we see in our lifetimes with the current economic environment we're in. Incredible opportunity is already here. If you'd like to apply to our amazing Warrior program, text the word CRUSH to 72345 and we'll set up a call. You can look us over, we'll look you over, and I can promise you, even if you don't join the program and it's not a fit, you're going to leave that call better than when you got on it. So again, text the word CRUSH to 72345 and you and I will speak soon. All right, let's get back to it.
Number two is understanding that price is just one specific component of a deal, right? Investors are getting caught up on price. We always look at a deal, we look at the deal announcements. Oh, that's sold for X, which is X price per unit. We always think about price, and that makes sense because price is fundamentally the most important thing. We realize that. But you also need to understand that that whoever's on the other side of the transaction may value a different component of the deal that's not price. And it's your job as you're negotiating and having conversations to try to identify and uncover specific components of the other side's motivation. And this is true whether you're a buyer or whether you're a seller. For example, let's say you make an offer of the same deal, right? $1 million, seller offers, or you start with your 902.7 offer, seller counters you at, I don't know, 970, right? And you're like, all right, we're getting closer. How do we start to bridge this gap? Maybe you make another counter that's well-reasoned. You're up in the low nines. You're in the 917 range. They come down to 960. You're getting really close. But the seller's like, this is my drop dead bottom price, hard line in the sand. And you're like, I got to get this for 950. How do I get there? Well, let's start thinking about the other terms, right? Let's start thinking about what you're going to do as a buyer as well. If you're a buyer who's going to finance this, if you're like any real estate investor, you're probably going to go find 60, 70% from a bank, which means you still need to bring cash to closing. And fundamentally, you're tracking the return of that cash. You're evaluating the IRR in the cash that you need to invest. You're evaluating the cash on cash return on the cash you need to invest. Maybe we can think about this another way, right? Let's say you offer 990 with 30 grand back at closing. The seller is getting close to their number of 960,000 because sales price of 990, but you're getting a $30,000 seller credit that's credited to you at closing and reduces the cash that you need to bring to closing, right? Now I'm getting a little bit more complex. I don't want to get deviated into the whole seller credit world, but long story short, it's a deal structure that may end up winning for both of you, right? You have this $10,000 difference with this line drawn in the sand. You're structuring or you're proposing a deal to the seller that basically allows him to walk away with more or less what he wants to walk away with, minus maybe, hundreds of dollars, because you're going to have to pay slightly more transfer taxes on that elevated purchase price. Now, when you go and think about it with your lender, maybe you would have had to have brought, for round numbers, $300,000 to closing initially, but now you need to bring slightly less because they're giving you a credit at closing that's reducing your cash to close. So now you're bringing 270 and change, again, because you have slightly more closing costs. And maybe that allows the deal to work for you, right? You're getting to a point where your same cash on cash return that you wanted to achieve at the 950 number without any seller credits. Again, it's important to get creative when you're pursuing deals. Now let's another example. Okay, seller wants to be at 960, you're at 950, but you know that the seller really, really wants to work with a buyer who's tied to this deal. Maybe it recently fell out of contract. Maybe the seller's older. Maybe they're trying to get this deal closed in this calendar year for tax purposes. Maybe they're trying to line up this. They got another deal that they're trying to 1031. They got to get this deal closed. They need the proceeds. They need the proceeds. Maybe there's some level of urgency on the seller side, and you know that they need some level of certainty of close. So Let's say instead of offering a $10,000 deposit, maybe that's what your deposit amount was. You say, listen, 950 is my drop dead number, but I'm increasing my deposit amount to $25,000 or something like that. And I'm moving up my financing contingency dates so that there's certainty of close earlier. My deposit goes non-refundable sooner. And now again, you're saying I'm coming up to 950, but I'm also giving you this in return. And I think a really helpful way to think about negotiating in real estate is we obviously care about price, but each side has different motivations. Even a sophisticated investor on the other side who you may think is purely price motivated could be motivated by something that's alternative to price. A lot of successful investors who are constantly making deals, they're probably selling a property because they need that cash to go throw into another project. And they may be incentivized, yeah, I'll take a little bit less if you can expedite the closing period, right? So it's important to evaluate all the different terms in a transaction: price, deposit, contingencies. Under contingencies, there's all kinds of different contingencies. What happens if a unit goes vacant, seller credits, any type of seller financing. You have all of these different terms. And yes, price is at the top in terms of what's most important. Basis over everything. Basis is important. But you might be able to play with all of the different levers to help negotiate and massage your way into a price, even if there's some kind of chasm between the two counterparties. So that's negotiating tip number 2, is to not just take a one size fits all to negotiating deals, but to really be diligent. And this is much easier to do direct to seller because you're having a conversation directly with your counterparty. But if it's a broker deal, try to propose a few different offers. Try to propose a few different scenarios to try to get a sense of maybe what's going to motivate the seller. Tip number 3 is setting an expiration date on your offer. Now, most savvy counterparties can somewhat see through this, right? Hey, my offer is only good till tomorrow at noon. An experienced broker is going to go, okay, well, if they accept it and it's afternoon, it's at 4 p.m., they're probably still going to take it. That is true. I will be the first to admit that. But you need to try to put some effort into creating scarcity around your offer. Now, less important on a broker deal because the broker probably is going to run their process. They're probably collecting offers and conveying them to the seller as they get them. And this is going to be less effective in that situation, especially because you're also likely competing with other buyers. Now, if you're direct to seller, this is much more important because when you make an offer to a seller, unless that seller is extremely motivated and they just want to quickly accept it before anything changes in their situation, those situations aside, a seller with low or moderate motivation is going to take your offer and they're going to say, great, I got both things that I want right now. I got my property and I got this guy's offer, right? Or gal's offer. And if you're not creating urgency around the next step, they're probably just going to sit there knowing they got you in the wings. They got this offer and they might go out there and they might call a few more buyers that have reached out to them. They might go and speak with a broker. They might go and take this offer and, I don't know, kind of put it in the filing cabinet as they continue operating the property because they think it's always going to be there, right? You're not creating urgency and action. So you have to create some level of scarcity. And how do we do that? One, you can set an expiration date. I need an answer by this date. Now, okay, that's arbitrary. Seller may see through that. But if you say I need an answer by this date for these reasons, X, Y, and Z, then it becomes much more valid. Because we're offering on other deals, and if the other sellers accept our offer on those other deals that we're pursuing, we're not able to pursue both, and therefore the offer is no longer valid. One example. 2, we're selling another property. We have these proceeds. We're looking to do a 1031 we have to identify. Now, if you're a savvy negotiator, you may view that as, okay, well, now I kind of have, balls in my court easily because they're pressed to make a decision or a 1031. I can help to negotiate. But ultimately, you still have, as the buyer, the greatest negotiating power, which is the power to walk away. It's just a way to help force urgency in that conversation. We own the property, we're, for some reason, we're refinancing this property and we have these proceeds and it's a limited time. This is one of the few times that we're able to get this aggressive with this offer because we have this liquid cash in the bank and we're able to pursue this deal really aggressively. Creating urgency around why your offer feels so good right now. Normally, we wouldn't make an offer this good, but because of these reasons, just sold the property, have some liquidity, we're buying the building down the street, whatever it is, right? Whatever the reasons are, the timing works for us to pursue this. And the number is probably not going to get any better than this because I've explained to you in these reasons why that's the case. So you need to do what you can to manufacture some level of scarcity and urgency around your offer, or else you're going to lose momentum, right? A common phrase that you've probably heard if you've been in the real estate for a while is, time kills all deals, right? The one thing that we're competing against the most in a deal outside of the counterparty is time. The more time that passes between, a counter or between a question that you're asking and an answer that you get, or between the first communication, submitting the offer, walking the property, the easier it is for the whole system, the process to stall out. Yeah, people are simple, right? When somebody wants to sell a property, and even if they didn't originally want to sell, but you kind of gave them a number and you sparked a thought in their head and now they're thinking about it, once that flip switches in their mind, you want to build on that momentum because that is when they're most interested in selling, is as they've been thinking about it and as they've made that decision. So scarcity helps to accomplish that goal. Number four, simple negotiating tip number four, and this is kind of a cop-out, I realize that, but this is, I'd be remiss if I didn't mention this as the most powerful negotiating tip I can give anybody who's listening. Negotiating 101, the greatest negotiating strength or ability, the best way to put yourself in a position of strength from a negotiation standpoint is to actually be willing to walk away. The individual in the transaction who is most willing to walk away has the most leverage. We all understand that. But I think we so rarely practice it in real estate because there's such an element of scarcity around pursuing deals when that just shouldn't be the case. If you don't see a lot of deals, and if you're rarely seeing new deals, if you're in a situation where you're just waiting on a couple of brokers to send you deals, when they send you deals, you're going to get all excited about them because you don't have any alternatives to pursue, right? And then you're going to get much worse tunnel vision on that particular deal, and you're going to get much more aggressive in what you're willing to pay and the terms you're willing to offer and how you're negotiating because of the fact that you don't have as many alternatives. One of the most powerful components in our business, in my business, as it relates to when we're pursuing deals, is we're literally telling sellers when we're having conversations with them, dude, we send a couple thousand mail pieces a month. We look at a ton of deals. Like, we don't need this deal like at all, frankly. And we actually do mean that. We say that and we mean it. And I literally have no emotional attachment to any given deals because of the fact that we look at so many deals. And the fact that our top of our funnel is so large as it relates to the deals that we're seeing for brokers, service providers, other investors, as well as what we're doing direct to seller, means that like I'm never getting wrapped up in any singular deal. And I truly do communicate to counterparties, and when we're on the buy side, look, we're offering on a handful of deals right now. Like, it's totally fine if this number doesn't work for you. We would love to work with you. If it does, we'd love to have a productive conversation as it relates to how we can potentially arrive at a price and terms that work for both of us. But if it doesn't work, that's okay. We look at a lot of deals. That's fine. That is a very, very powerful way to approach any given deal. And the easiest way to develop that, frankly, is to spend more time on the top of the funnel. The easiest way to negotiate better deals once you get those deals down the funnel is to put more at the top of the funnel, which sounds counterintuitive, but it truly is the best place to focus your time from a deal sourcing standpoint. Is not trying to extract the most value out of any particular deal, because yes, that is an important part of the process. But the easiest way to do that, outside of some of the tips I just shared and plenty of the other negotiating tips that you'll read if you start going down this road and start learning more about negotiating, is by just looking at more deals, right? It's along the same lines as a sandwich shop, and this is going to be a loose analogy, but stick with me. It's the same thing as like a sub or a sandwich shop that makes mediocre sandwiches, and they're trying to figure out how to be better at sales and marketing. And it's like, we're trying to get more customers in the door. We're trying to do this little marketing initiative. We're trying to run these types of ads. When in reality, the easiest way to get more people in the door is to make better sandwiches. Go upstream and solve that problem, and then everything downstream becomes way easier. It's the same thing with negotiating. So, recapping the four. Number one, first offer should be very specific. Ideally, an odd number with plenty of reasoning behind it when you start negotiating and having a conversation, whether you're on the buy side or the sell side. Number two, understand that price is just one component of a deal, and that when you are negotiating, you need to list all of the terms and try to align the terms in a specific transaction that may solve some type of problem or alleviate some kind of problem on the seller side, and understand that it's a give and take process throughout the negotiation. Number three is to create urgency and scarcity, set expiration dates that are well reasoned as to why you're setting those expiration dates. And number four, the easiest way to negotiate better deals is to build the top of your funnel and look at more deals. So if you found this episode helpful, leave Rod's Pod a rating and review. I'm sure he would appreciate it. And if you'd like to connect with me, at Multifamily Wealth on Instagram is where you can find me. Go and follow me, shoot me a message. Always posting content on there, both related to direct to seller, marketing, prospecting, finding good deals, as well as just multifamily real estate investing in general. But thanks again for listening, and I'll catch you guys on the next episode.